Hi everyone, welcome to Freedom Folio. I am your host today, Shirley Liu. I am one of the 800 certified tax planner in the US. My firm Freedom Folio is a virtual full-service accounting and tax firm based in Boston. We specialize in real estate. We've worked with a lot of real estate agents, brokers, and landlords. So far we've saved our clients $2 million in federal taxes and counting. So today I want to talk to you about a very interesting question, which is what do my accountants really need from me for tax planning and for my tax filing, right? Actually, we run into this tension a lot, because I don't think anybody likes getting multiple texts or emails from their CPA or bookkeepers or accountants, right? When we need to request for information, nobody likes to. Everybody feels slightly annoyed. And I think it's because of a lack of understanding of why their accountants or CPAs actually need this information. Like, what do we do with all that numbers? Like, right? And then why is that important? And how does that ultimately benefit the taxpayer in the end, right? So when you don't have an understanding for what we use that information for, or how does that translate into tax saving for you, then of course you resist, right? Resist the urge to like actually help your accountants out. You feel like it's just more work for you. So that's why I want to just bridge this gap in understanding by kind of going over at a very high level why we need these informations and then what do we do with it. So most of the real estate agents, when you start on your own, then you become like a freelancer, right? Whether or not you have an LLC or you operate as a sole proprietor, you're no longer getting paid a W-2. So when you don't get paid a W-2, then your how your business is doing, how much money you made, that's no longer summarized very nicely on a W-2 at the end of the year, right? And then no tax withholding will be done for you throughout the year, because you're supposed to figure that out yourself and then pay whatever estimated tax you need to do um, as you move through the year. So I think that is definitely a huge transition for a lot of people to getting paid a paycheck, right? And then now they do their own business and they don't receive a paycheck anymore, and then they have no idea how much money they made. And then when they go to their CPA, then they don't really know where to start, right? So maybe they just know that okay, this year I made a lot of money, but how much tax do I owe? And then and how exactly going to help me? So we have clients. A lot of real estate clients who don't really, maintain like, their own accounting record, which is fine because they're not accountants. They're not professional accountants or bookkeepers. They have no idea how to set up a chart account or even understand which expenses are deductible, right? And that's fine. So a lot of them actually maintain, all their numbers on like Excel spreadsheet. The problem with that, one is you may not be pulling in all the information at year end if you're doing everything on Excel, right? Especially if you're not putting all your expenses on your business credit card. So for a lot of my clients, no matter what your entity choice is, I always tell them at least just get a business credit card and then pay for anything that's remotely business related on that card. And just keep in mind that credit card statement is only useful at end of the year to gather all the information so you can figure out what your true income is. But that is not really intended to be used as audit evidence, right? So if IRS comes back and have a question about your meal expense, for example, just giving them the credit card statement is not audit. It's not a sufficient enough of an audit evidence. What you need to give them is a, the actual receipt for that meal, which you did with the client. So what you should have on the receipt is the date, who you met with. The business doesn't have to close, right? You don't have to close on that deal, but if you had a meeting with your potential lead, you should have that and what was the deal for, just some like basic description. That's enough. So I know that IRS has a general rule of thumb, which is anything under $75 they're not going to want to see the hard copy. And I don't need to see a shoebox of receipts from you, but at least for audit purpose you should maintain like a picture file of like everything that you paid at the restaurant, right? So you don't have to have the hard copy, but just take a picture of the restaurant receipt and then, just make some note beside it so you know who you met with that day. And if the IRS ever, want to see it, you can just pull it off on your phone, and that's more than enough for audit. And another thing is, so if you put everything on the credit card, I think definitely helps at year end. At least you know that you're putting all the expenses on there. And if you don't know which expenses you can write off, we've created various like resources to help our client, um, to make sure that they're maximizing their tax deductions, right? So we have a cheat sheet that we created for real estate agents. This is called a tax deduction cheat sheet. We broke everything out by categories, right? So advertising, anything that you pay for referrals, banners, television ads, web design, these are all deductible under marketing. Business travels, right? If you went to like another state to look at houses, or you went to another city to go to like a real estate conference, you know, the airfare, the car rentals, lodging is all deductible. Communications, right? If you paid or bought a cell phone and you're using the cell phone 80% of the time to talk to your client, that 80% is deductible from the business. Education, if you went to um, trainings, right? Or you bought any books to help you sell more houses, right? These are all deductible under your business expense. Equipment, right? Like a lot of realtors nowadays have, like drones, so they can take, a bird's eye view of the property, right? Like, so if you bought a drone to do that kind of video, then that you can deduct that under equipment. Or if you have like, virtual assistant, you have like a team of people help you stage the houses or do open house showings, right? Sales assistants, these are all deductible under employee wages. Home office is also deductible. Um, and then this is where I want to kind of caution you, because there are two different ways you can write off your home office. Now, for a lot of real estate agents, you actually sit in the car quite a bit. So you may not be using a home office as much, but you can still have an exclusive space set up in your house where you're, taking client calls, or maybe you're looking at some listings. So as long as it's an exclusive space you use for work, you can claim as office, home office. And the two ways you can write this off. One is a simplified method, and this one's super straightforward. Take the square footage of the home office and multiply that by 5. I think the maximum you can write off is 1,500. And another one is the actual method. So where you apply a percentage of your home office square footage divided by the total house square footage, use that ratio and then multiply by your house mortgage, your house property tax, your house insurance, and your house depreciation. So if you use the actual method, you may be able to claim more write-off. But what you need to be careful with is, as soon as you start claiming the actual expense on the home office, then you start depreciating your principal residence. So when you sell that principal residence, you know how you have that 121 exclusion, so you can exclude up to 500K of capital gain. But if you have depreciation, then you have to pay 25% capital gain on that recapture on the depreciation you've taken on your home office. So that's something you want to be a little bit careful with. And that's why you need to work with like, maybe a CPA or a professional, tax professional, to figure out which method is actually gonna, give you higher return in the long run, right? So we do have, like calculators that we use. I'll just show you. This is a very detailed calculation, where we're factoring, your marginal tax rate, your self-employment tax rate, how much is your home office square footage, the price that you paid on any home improvement, and in the end, it spits out, well, how much is actual method better by, or how much is the IRS optional home office deduction method better by, right? So you can make a more informed decision. And then again, this is why it's so super important to keep track of, all your expenses. This is just one example, right? Like where your CPA can be helpful. Um, because we can run an analysis like this, so you can make a decision on which deduction method you want to use for the home office. And another thing you can also deduct is, of course, vehicle, right? And again, this is all actual expense method, right? Car wash that you did, depreciation or lease payment, gas you paid, insurance, interest, license or registration, repairs, tires. Now these expenses are deductible if you're using the actual expense deduction. If you are sole proprietor, you do have the option to do either mileage or actual expense. But if you incorporate it and you have an S corp, then you cannot do the standard mileage anymore. And if you are driving a um, a personal vehicle for business use, the corporation is supposed to reimburse the employee, namely you or anyone else on your team who's driving the car, which is under a personal name for business use. So the corporation is supposed to reimburse the employee for using their vehicles. Now, if it's a corporate owned vehicles, then you can't even use the standard mileage if it's in a corporation. So, but for sole proprietors, you can choose to do mileage or actual. So which one should you do? Again, it's not a black or white answer. This is where we need you to provide all these expenses, right? So that we can run analysis, and then we have a calculator for that one as well. I can show you guys here. We have a tax planning calculator specifically for vehicles, right? We can tell you if you should use the IRS mileage rate versus we should do the actual expense write-off, right? We have a calculator just for that. And again, we share all these resources free, with all our existing clients. You're more than happy to take a stab at it and see if you can make sense of this complex spreadsheet. But we build this out so that we can help our client make informed decisions, right? But if you don't have all those expenses for us, we will not be able to tell you which one is going to be more favorable, right? See, because we need some information from your end, right? We need to know how many miles you've driven, how much gas you pay for. So we do need some data input from you. We won't get that information if you don't have all these already summarized or organized for us, right? We also help our client decide, whether buying a car or leasing a car is gonna be better for their business. And again, there's so many things that you need to look at, right? But then we do share all these resources with our clients, and then we share all these like tax tips almost every week. But we have a calculator built out for that as well. So again, it's not a black and white answer, and then we do need all those data input from you so we can give you an accurate answer, right? Accurate information so you can make a decision in the end. And that's why it's like so important that you organize your information for us, and then you make sure that you are taking advantage of like all this cheat sheet that we created, so you are not missing out on any deductions, right? For example, did you know that the fee that you pay to your CPA is 100% deductible? That you should include that on your P&L, right? Or anything that you pay to your bookkeeper, that's 100% deductible, right? Your retirement account, right? And all this is also before tax deduction that you can take. So I strongly encourage you or our clients, if you or potential lead, to take advantage of all the free resources that we have, so you're not missing out on any deductions, right? Because I'll give you an example of a client that we recently worked with. She does her own bookkeeping, which is fine, and she even subscribed to this solo proprietor accounting software from QuickBooks, which is only $10 a month. She made 250,000 last year, and then she linked her bank account and credit card account to QuickBooks, and then we did before the year end tax planning meeting with her, and then everything is supposed to be on QuickBooks. So we took a look at it, and then she barely had any expense, no expense whatsoever. So the first thing that we did was, we maximized her deductions by, taking a deeper dive into her expenses, and we were able to identify at least 25,000 more of tax deduction for her. So that's tax saving right away. That's money in her pocket. So again, that's something that I want you guys to be aware of, and then please again take advantage of all these resources. And this is why we need you guys to pay attention to these things so that when we have that annual year um, end of the year tax planning meeting, at least we have some meaningful number to look at, right? The same for her financial advisor, because if we don't have the accurate business P&L, her advisor wouldn't even know how much money she can put away in her retirement account and whether she should do it before tax or after tax. All of this is data driven, right? So if the data is not correct, then we will not be able to make the most informed decision. And this is a teamwork. It requires collaboration from our client. Requires you to do more due diligence, and then do a better job with your expense tracking, right? So again, this is why having the organized accounting record is super important, because and ultimately this benefits you, the taxpayer, and it makes our job easier. It helps us provide you with more sound advice and help you make informed decision before year end.